Hello everyone, welcome back to my channel. In this new educational video, I'm going to teach you about inverted fair value gaps, what they are and how I personally use them for both determining and confirming the bias and in the lower time frames as entries and for stop loss placement. Now, I'm not going to give you a strategy entirely based on inverted fair value gaps or teach you about the pattern so that you end up buying and selling every fair value gap that gets flipped. No, instead, I'm going to teach you how to actually read price like the real ICT profitable students and use inverted fair value gaps properly. The things we're going to discuss today will take your trading game to the next level. This video will be split into two parts. The first part, I'll talk about inverted fair value gaps on the higher time frame and how you can use them to determine bias. The second part is inverted fair value gaps on the lower time frame and how you can use them for entries and to spot early reversals. Of course, we will go through a lot of examples together to fully understand the concept. And now, let's just get started with the video. Now, as I told you before in the introduction, we're going to split this video into two parts. The first part is how to utilize the inverted fair value gaps on the higher time frame, and the second part is how to use it on the lower time frame. Now, an inverted fair value gap is easy to spot. The pattern is easy. It's basically a fair value gap that got violated, and now it will act as support or resistance. We will not talk about the pattern itself because we are not pattern traders, right? We trade the context and narratives. So, although the pattern is the same on both the higher time frame and the lower time frame, the utilization of the inverted fair value gap on the lower time frame and the higher time frame differs, right? So, for the first part, we're going to use this index, so the DAX Germany 40, and I have shared that on my Twitter account. So I give you the outlook. I told it I was looking for this high right here to be hit, and as you can see here, and of course I took a long position based on that outlook, right? So this is a live example. This is something I personally use on my day trading. I don't like to teach with hindsight. Everything I teach here on my channel is how I actually trade. All right. So let's just get into the chart and let's talk about how to use inverted fair value gaps. You all know what an inverted fair value gap is. It's easy to spot and it is not rocket science. This fair value gap right here, this CB, got violated and it acted as what? Support right here and pushed price to the upside. But the real question here that we're going to answer is how do you know that this inverted fair value gap right here will push price to the upside? It will act as support and it will hold price from here to push it to the upside. So a lot of times inverted fair value gaps got violated once again right here and price will just keep going down, right? So the objective of this video is how to identify a valid inverted fair value gap from an invalid one. I saw a tweet the other day. Some of them I really forgot who was he, but he said that an order block without the right context is just a candle, and a breaker block without the right context is just a candle, right? And this is so true. We trade context and narrative and not patterns, guys. And this is what will take your trading game to the next level. Trading context instead of patterns. Alright? So here I want you to remove this inverted fair value gap from your head. So we're not going to use this to frame our entire bias. We're going to use this to reach to our objective, to reach to our draw on liquidity. Alright, so let's remove it for now. Now, what do you see in this piece of price action right here? Again, when you open a chart, your first target is you look for the draw on liquidity. That's the first thing you look for. If you don't have a draw on liquidity, if you can't identify the drawn liquidity in the first 30 seconds or 40 seconds, then it is not clear and you need to abandon that pair or that index and move on to something cleaner and easier to trade. All right, this one right here has a clean draw on liquidity, and I'm going to show you why. So can you pause the video and maybe annotate this piece of price action right here and see what's going on, right? Now, as I told you in my previous videos, you need to answer 2 questions when you need to find the dot or the draw on liquidity. From where price came from and what it is trying to reach. All right, these are the only 2 questions you need to find the draw on liquidity. And let's answer the first question. What is the origin of this move right here? Because we are on this move right here. All right, I capitalized on this weekly candle right here. I know I talk a lot, guys, but I'm sorry, this is the only way to learn ICT concepts, not those 5-minute 100% win rate strategies videos. All right, if you want that kind of videos, you are more welcome to close this video and go watch something else that doesn't work. This is the only way to learn. So we are focusing on this candle right here, this bullish candle. So what is the origin of price? Some of you are looking at this low right here and thinking that price never took this liquidity from here, and there is always a chance for price to keep going down and take liquidity from here. But this is not the case here. This right here is a rejection block. Price already took liquidity from here. So this is a rejection block. When you see a low or a high that has a long wick to here, price doesn't need to go all the way to here and take the liquidity. All right, why? Because the bulk of the volume and the bulk of the stops, whether they are buy stops or sell stops, are just below the bodies of the candles right here. So as you can see here, price traded below the bodies of the candles right here, gathered liquidity, and then reversed. This is the definition of a rejection block. So price doesn't need to go all the way to here to reverse. All right, and if you go to settings, right, and you uncheck the wick, so as you can see here, right, price took liquidity from here. Remember that the bodies tell the story, the wicks do the damage. So we answered the first question. Price did take liquidity from here and it is coming. So the origin of price is this rejection block from here, this weekly PD array, this rejection block. And of course, it is a discount PD array because it is located in the discount of the range. All right. Now the next question is, where is price trying to reach? So the target. From here, we have a target, which is this fair value gap right here. This is our target. This is the first objective, and you can of course capitalize on a move from here to here. External range liquidity to internal range liquidity. And remember guys, price gravitate towards only 2 things. Either external range liquidity, so highs and lows, right? Above highs there is buy stops, and below lows there are sell stops. And the second thing is imbalances. So price attacks liquidity above all the highs and below all the lows, and balancing imbalances. So here it took liquidity below this old low right here, and what is left, this imbalance right here. Price went to that objective, balanced that imbalance, but it got violated this fair value gap and we closed above it. All right, so this became an inverted fair value gap. Now the question here is, this inverted fair value gap can hold price to the upside. Is there a reason for this inverted fair value gap to work? This is the real question that you need to answer. Is there a reason for this inverted fair value gap to work and push price to the upside? All right, do we have a target? So we have the origin, right? We have the origin right here. This inverted fair value gap, as you can see here, it acted as support right here, and now we are on here. Now on here, price can easily go back to here and keep going to the downside, or it can go to the upside, right? So we need to find which direction is more probable, and by that we need to answer these two questions: the origin, and now do we have a target? So is this PD array can hold price to a higher level? Yes, we do. I told you that price attacks internal liquidity and external liquidity. So do we have something here on the upside? Yes, we do have this equal highs right here. This relative equal highs right here. And we also have failed swings, right? So this swing right here failed to take liquidity from this swing. So we have here a pool of liquidity that has never been topped. Here we have a pool of liquidity also that has never been topped before. And we have also this equal highs above. So do we have a target? Yes, we do have a target to reach for on the upside. So we answered the two questions. We have an origin, right? And we have a target. And that's it. This is how you get your doll. And this is how you know that this inverted fair value gap will actually work and push price to the upside or the downside. This is the context behind why this inverted fair value gap held price and push it to the upside. So to summarize things up, whenever you see an inverted fair value gap, ask yourself, is this inverted fair value gap is in the right context? If it's in the right context, it will work. Most of the time, it will work. I guarantee you that. I have really high accuracy in predicting the higher time frame because I know the right context and I know how to use the PD arrays. All right. Now let's take a look at another example right here. The second example is in the same index, in the same chart. So we can see that we have a fair value gap right here, right? This fair value gap right here worked and pushed price to the upside to take more liquidity from here. So we have here a 3-drive pattern. Price was constantly taking liquidity from this high side here, right? And as you can see, price went one more time to here. This fair value gap pushed price to the upside and eventually it's got violated and now it acted as what? A resistance. So this is an inverted fair value gap. Once price closed below this, right, and went all the way to here, we can know that this fair value gap became an inverted fair value gap, right? So the question here, will this inverted fair value gap push price to the downside? And again, let's read the narrative. As you can see here, that price from here took this liquidity from here, this pool of liquidity in the form of equal highs, right? And price was constantly taking liquidity from here. This high took liquidity from here, and this high took liquidity from here, and finally this high took liquidity from this high right here. So on the buy side, on the upside, we took a lot of liquidity, and there is no reason for price to violate this inverted fair value gap and push price to the upside. Why? Because we don't have that much of liquidity and gravitates toward low resistance liquidity. All right, and here we have high resistance liquidity. So we have the origin of the price. We don't have a reason to come back to here, and we have a reason to go to the downside, which is this pool of liquidity right here, this rejection block right here. So we have answered the two questions. The origin is this inverted fair value gap, right? And we have a lot of liquidity purchase above us, right? So there is no reason for price to come back all the way to here. And we have on top liquidity here. Now let's forget about the inverted fair value gap right here, all right? Let's just remove it. When price is here, do you think it is more probable for price to go to here or to here? You need to identify the least resistance route, all right? The least resistance route is obviously this. We have untapped pool of liquidity here. Here we have a lot of purchase, right? So price was constantly taking liquidity and taking buy stops from here. So without this inverted fair value gap, we can favor one direction over another, right? Just by the term of liquidity alone. Now the PD arrays will help us to confirm that and to position ourselves into trades, right? So we can find short positions from here and use the time frame alignment to go to here, all right, to take shorts. So basically, this is how we use inverted fair value gaps on the higher time frame. I know I have talked a lot, and I'm sorry for that, but I feel that everything I said is necessary for you guys to learn how to read price properly without patterns, all right, but with logic. And now let's move on to how to use it on the lower time frame. The process is different, and you will know exactly why, because you will already have a target in mind. All right, so let's move on. And now moving on to the second part of this video, which is how to use inverted fair value gaps on the lower time frame. Now, the utilization is simple. You can use it in 3 different ways. The first one is to use it to spot early reversals. All right, so we are already expecting a reversal to happen, and by seeing an inverted fair value gap in a point of interest, and now we don't need to wait for that market structure shift, all right, the displacement, breaking an old high or an old low and a retracement. You can now take your entry based on that inverted fair value gap and get an early position, and maybe you can add to it when you see that market structure shift. That's the first utilization. The second utilization is to use it as a confluence in your entry, all right? So maybe you saw that market structure shift and now price is chasing, and you have an order block, and it is also paired with an inverted fair value gap, or maybe a breaker block that is on the same level as the inverted fair value gap is, all right? So now you have multiple confluences on your entry area, and that would be a powerful area to enter from, all right? That's the second utilization. The third utilization is to use it for stop loss placement, to protect your stop loss below or above 3 PDRAs, maybe an order block, a breaker block, and finally the inverted fair value gap. As you can see, that the utilization on the lower time frame is easy, right? Nothing is complicated about this, but this is not our objective from this video. Our objective is to know and predict that that inverted fair value gap will succeed to hold price to the upside and push it to the upside or the downside. So as you can see, we are not creating the idea of going long or short based on that inverted fair value gap. No, we're not doing that. We are using the inverted fair value gap to confirming our trade idea, all right? So there is a fine line between the two. You are already predicting that that inverted fair value gap would work. And how we're going to use that? By reading the context. Let's take a look at the examples together. So as you can see here, I'm going to use examples from my Twitter account. I don't like to use hindsight examples. So these examples are based on trades that I took. So the first example here is the Canadian dollar against the Japanese yen. And before we go to the lower time frame and show you how the inverted fair value gap works and how I use it here, instead we're going to take a look at this higher time frame area. I know that we have done with the higher time frame, but this is a great example. So as you can see here, that this is an inverted fair value gap right here. This is a fair value gap, right? It didn't hold price from here, and we closed below it, right? And price traded to here, and now we came back to it. So should this inverted fair value gap push price to the downside? No. Why? We have already taken liquidity from here. As I told you before, long wick, this is a rejection block, and price already took liquidity from here, all right? So should this inverted fair value gap right here push price to the downside? No, there is no reason for it to push price to the downside. And as you can see, it failed, and we pierced through it one more time. Now we're going to use it as what? Support. So again, should this inverted fair value gap right here act as support? Is there a reason for it to push price to the upside? We do have a reason for it. We have all this pool of liquidity right here, failed swings, right? As you can see here, we have also this failed swing right here. So this swing right here, this candle failed to take liquidity from here. So we have buy stops right here that has never been topped. All right. So we have a reason to go to the upside. And as you can see, we hit that draw on liquidity. So this is a great example of an inverted fair value gap that didn't work because there is no reason and there is no context for it. But here we have a context. And we have also this fair value gap right here. So internal range liquidity to external range liquidity. So a context. So price after it retraces to this inverted fair value gap right here. We have a reversal, market structure shift, right? We have this market maker X model, buy model to target this consolidation. And now we can expect higher prices. And this is the lower time frame. And let me just go here. So here is that inverted fair value gap, right? We have a market structure shift, right? And price now retrace to where? This fair value gap, and we have also this inverted fair value gap right here. So as you can see here, we didn't use this inverted fair value gap to create a long idea. No, we have already that long idea in mind, and we only use it as an entry. I know that I took the entry from here, but that's just because I didn't catch that. All right, I missed that. So this is a great utilization of the inverted fair value gap as an entry. All right, a confluence to enter the trade. Let's take a look at another example. And now moving on to the second example, and this is DAX. So as always, I shared that on my Twitter account. And as you can see here, price is now is sitting in a breaker block, right, on the 1 hour. And we have another market structure shift here. Price returned to a fair value gap. And what do we have here? A fake inducement to the downside to return to this hourly fair value gap. Or it was 15 minutes, I don't recall. Anyways, when you see this CB and you have already that long idea in mind, we are expecting this CB to fail. All right. So when price was here, I was expecting for price, I was expecting this CB to fail and act as support, right, and to become an inverted fair value gap right here. So once this candle closed above it, and now we can look for entries when price retraced, but price didn't retrace and it kept going up. So this happens in trading. I won't show you perfect examples every time. So this is another example of how to know that an inverted fair value gap will work. All right, let's move on to another example. Another example, and this is the Canadian dollar against the Japanese yen. So as you can see here, we have an inducement into this daily order block, and this is the 1 hour time frame. So after that inducement, we have a fair value gap right here. So based on the higher time frame and the idea of going to the upside, so we have a draw on liquidity here, we can know that this fair value gap here will fail to hold price and it will act as an inverted fair value gap, and there is a reason for it to work and hold price from here. So I believe this is the last example. I know, guys, that this video was not well structured as my previous ones, but I believe this is the only way to teach inverted fair value gaps, because inverted fair value gaps are just a simple signature in price. Everybody can see it. All right, this is not rocket science, but the complicated part is how to know whether this inverted fair value gap will work or not. And in order for it to work, you need context behind it. And to build that skill of knowing and reading the context is not easy, and it needs time and practice. This video was about context more than it was about fair value gaps and inverted fair value gaps. So I believe we have come to the end of this video. If you guys liked it, please consider to subscribe and leave a like on the video. And if you have any questions, please DM me on my Twitter account or leave a comment down below, and I'll answer you as soon as I can. Happy trading and good luck.